Good morning, Matthew. Warren Rehn here, Golden Minerals President and CEO. We're an up-and-coming gold and silver producer with production in Mexico, and we have plans to improve and expand that production.
Warren, good to see you again, sir. I think we caught up with you at a conference in November. You gave us a little update then, so good to speak to you now. You've just put out the full year results for 2021. Some quite pleasing numbers in there, weren't there?
Yeah, we did. We had a great year. Based on the production at Rodeo, we beat our metrics. We said we'd produce between 12,000 and 14,000 ounces of gold. We produced 14,400 ounces of gold at a very good price point. Overall costs were about $900 US per ounce produced. And so quite a profitable year for the company. And bear in mind, this is our first year of return to profitability, or at least to income generating. Shall we say, we were not profitable as a company for the year, but we had two bottom line quarters, Q3 and Q4, with a net profit at the company level. Very pleased with that. We're building cash. The Rodeo project just is ticking along without any flaws at all, no faults. And we've extended the mine life by probably about 6 months over initial plan. Based on exploration drilling last year. So excellent results for us, and it really sets us up for the future for bringing Velardeña back into production. Now we've made great strides in improving our knowledge about the new process, the bio-oxidation process that we intend to use to get better return on production. Things are just going very well in that direction. We hope to get to a decision point later this year on the Velardeña story.
It might be worth me quickly summarizing where the conversations that we've had over the past couple of years, okay? Because I was quite intrigued and drawn to this story because you've got this huge portfolio of assets, and you needed to work out a way how to fund it. And obviously, you're focusing on Mexico initially with Rodeo. It's a 2.5-year life of mine we last talked about. You've extended that by 6 months through the drill bit. So it doesn't sound like a lot, but I guess it's 25% increase is quite meaningful with gold prices as they are. So will you be continuing to try and extend the life of mine there?
Yeah, there's still opportunity. We're still drilling off to the south where it's open. I think we may be close to the limits of that pod of mineralization. But we know that there's signs of additional areas of mineralization in the district. We do control some of them on our claims. It's a matter of continuing to drill as funds allow to see if we can't expand further. So we're definitely looking at opportunities to keep that going. Because we don't have any capital investment per se in the project, the mine life isn't as critical other than to have the cash flow from the operation.
Right. Well, I'm sort of also intrigued by the fact that it says to the market, "Hey, we can mine. We can put it together, create some cash revenue." It's not big, but it's fit for purpose because it's the next stage that I think people are interested in seeing you deliver, which is the Velardeña project, right? And so, where are you with that?
Yeah, so that's really the key piece for the company because it's a major part of our assets. The Velardeña project's been something that we've been looking at for quite some time now as a company, since 2011 when we joined with ECU. Right now we finally have a very good plan going forward to bring it on, profitably and for the long term based on getting better gold payables through this bio-oxidation process of the gold iron concentrates. So the test work has been flawless. We did a third round of tests with Uditech of South Africa. The results were spot on, as good or better than what we had in the first 2 rounds of test work. And so now we have very strong confidence that the process works just like predicted. We get that 90+% recovery of gold and silver from cyanide processing the oxidized pyrite concentrates. And that's critical to the project. The gold value in Velardeña is about equal, a little bit lower than 50%, like 45% of the value is in gold, 55% in silver, a bit lead and zinc thrown in just on top. But getting that gold payable is crucial for the long-term profitability of the project. And those results are excellent. We have no problem whatsoever with the technical aspects of that process.
So you put that to bed. It's taken a while, but you're saying you feel confident enough to say we can put that to bed. That cannot be held against us. But your third round of testing, great. But how quickly does Velardeña move forward? Because you say it's a significantly bigger project than Rodeo, which is gets a bit of cash flowing, covers a few costs, proves that you get your miners. But Velardeña needs to start delivering. It's a 10-year life of mine, 2 million as a silver equivalent a year. You get low cash costs, you're saying. So you need to kind of drive that thing forward. I mean, so give us a sense of timing on that.
Yeah. So we're just now we're completing the mining studies to make sure that we can deliver the head grade that we have in the plan. That's the other key piece after the bioxidation processing piece. And that part, as you mentioned, is, we're confident that that's fine. So now we're testing out a new mining contractor who will help us deliver, the head grades that we have in the plan. We should have those results back within the next month, and then be poised to make a decision at the corporate level to go forward with the construction of the project. Now, the BIOX plant will take about a year to build, to complete. So that's, mid-year next year, perhaps, when we would have that actually finished and turning out the oxidized material to get the good gold recoveries. But we're looking now at the timing to start mining ahead of completion of the BIOX plant. I think we can start at least 3 or 4 months ahead of that, and we'll ramp up production, get that going, and have a stockpile of concentrate to oxidize with the BIOX process once that's completed. The project is profitable without the gold portion, but it's not nearly as profitable as it will be with the gold portion, obviously, if half the value is in gold.
Right.
That looks like the time schedule, the schedule that we're going to be able to use. The definite schedule will be put forth mid-year when we make the corporate decision to go forward. But I'm very confident that it will be a positive decision.
Okay, so you've talked to me in the past about the resumption of operations, and that, as you described, that's not necessarily starting to produce gold. Because you've got a bunch of stuff to put together. Can you give us a sense of how quickly things follow in terms of when you'll actually be starting to produce gold, and I think what that ramp up period would look like, because it's a meaningful size operation compared to what we've seen in the past. So bringing all that together, you're going to need to get the funds in place. You're going to need to persuade the market that you know what you're doing, and that you'll have that bioxidation conversation, no doubt, with whoever's funding this. Is that an easy set of steps to kind of work your way through?
Yeah, I think it's a very logical progression. We have this mining contractor proving that we can get the correct head grade delivered to the plant. That's part one. We know we can make break even plus some profit based on silver, lead, zinc production. The lead concentrate that we saw that has most all the silver does have some of the gold in it. So we do get some value from the gold from the flotation concentrate sale before the bioxidation portion is complete. But the real profitability of the operation does depend on that bioxidation part, just to give it that that excellent project profitability status that we'll have.
Right, and so just on this, because I think it's really important to understand whether, for us to understand, we think how this thing gets financed and the cost of getting this thing financed, because there's a few things going on out there. Okay, clearly, inflation, putting costs up across the board doesn't help with the studies, and margins, more importantly, unless gold starts to move again. But the cost of money, which is something people don't often look at, is with a normal run-of-the-mill operation. People understand it. You can get all sorts of, money available to you. You can get the maybe some NSRs on it. You can get you can get debt on it, you can get regular equity on it, and there's a kind of set sort of a price in the market that people would expect to pay for that. With you, because of the technical difficulties in the past, would you expect to have to pay more, or do you think people are less likely to lend against that? I mean, do you know what I mean? It's a slightly different conversation that you're going to have to go through.
Yeah, no, fair enough. For starters, we do have a fair amount of cash in the bank to start us off, so we don't have to go get funding to start the build. We've got over 12 million in the bank, that we can start to spend from to get this project started. We have a number of vehicles that we're looking at, including debt offtakes, as you mentioned, and all of them look very reasonably priced to us. So I don't think we're suffering from a high risk opinion from the people who might finance us. And there's frankly there's quite a spectrum of possibilities for finance here, other than equity. And we're looking at a bit of leverage, a bit of potential short-term debt that wouldn't be extreme. And we're only looking at needing 15 million or so to do this in completion. There's a bit more on the contingency if costs continue to go up. So 15 to 17 million, let's say, of which we already have 12 that we could spend, and we will build cash as we go forward from the Rodeo operation.
So you're
confident. So there's a lot of options.
There's a lot of options, and you sound confident enough to say we've got cash, and you're throwing off a bit of cash from Rodeo and adding to the kitty, but you're confident enough about the financing that you're willing to start spending money on the project before you're sure of having the funding in place to complete the project.
We'll have vehicles in place at about the time we start, Matthew. So we've had ongoing conversations with a number of investment banks and other sources of funding, and I see absolutely no problem whatsoever. And I'm veering away from any equity raise at this point. I think we can do it based on internal cash, based on perhaps a facility with an offtake. Not a stream, but with someone who we will sell the products to at the end, and the possibility of a small debt facility to give us that extra flexibility.
Okay.
So we will put this in place in the next few months.
Okay, fine. And then, all things being equal, cash flowing when? What's that time frame look like?
Oh, in terms of getting the cash from the project.
Yeah.
So the updated PEA or economic analysis of the Velardeña project, shows at 8% discount, 120 million NPV over the 11-year life, and that includes the inferred material. It's about half and half M&I and inferred, given the narrow vein format of the deposit. Hard to get all in the M&I categories, but it looks quite good. So that 2 million equivalent silver ounces per year production, produces something on the order of 20 million free cash flow on an annual basis.
Right. Are you building this off the back of the PEA? You're not necessarily running through the usual conventional study process. Is that right? Yeah.
So the published report is at the PEA level.
Okay.
But let me say that we have done substantial work in addition to that, to where it would not be difficult for us to have completed a feasibility type study. We've done that internally. We have not paid to have that report published. Because we're not looking for extensive financing, it really hadn't been an important aspect of the project to me. And I think that we'll find our funding at very adequate cost without having those very expensive feasibility studies published, and that's been the philosophy.
Okay, so it's less cost, but conventionally people would normally go through that process because it gives comfort to the financiers. So what is the bit that they're looking at which says to them, it may be a PEA, which is typically, huge variances. I always say plus or minus 30%, right? what's the bit that they look at? So I know what bit I need to look at, which says, do you know what? They've done a lot more work than a conventional PEA, but this is the element which gives me great comfort that they know what they're doing and the risk has been greatly mitigated, more so than a regular PEA.
Yeah, fair enough. And because we have produced from Velardeña, first when we acquired the assets in 2011, produced for 2 years, just about 2 years at that point, and then another year in 2015. We did produce the metrics in terms of production that we said we were going to be able to do. The only issue there was the gold payable, frankly. I think that gives you the level of confidence that you need without having the feasibility in hand. That we do have, the plants are built, the plants function, the recoveries are what we said they would be. It's the payable that was the issue. Now, the other thing that we've been looking at, obviously, was the dilution in the narrow vein mining to make sure we can control that and not get the head grades lowered beyond the point that makes the metrics possible that we have in the studies. So I think because we produced previously, that takes a lot of the risk out. And right now, the plant is in operation, the oxide plant that we'll use to actually produce the doré from the bio-oxidized product from Velardeña. That plant's operating now, producing the doré for Rodeo. So you've taken out a lot of those variables. You've taken out a lot of that risk and concern that, does the plant work? Can they operate? We've got that done. So I think that gives us, the balance to overcome the otherwise risk we would have by not having a feasibility study in hand.
Okay, understood. Makes sense. Talk of high-grade narrow veins. You've been doing a lot of drilling over at Yoquivo. Some nice numbers coming out of that. Is it more of the same as what you expected to see?
Yeah, the beauty of Yoquivo, the recent results was that very high-grade ore shoot on the Pertinencia vein, wide open to the south. We hadn't expected that to develop where it is because it is, closer into the center of the old district than some of the old workings had led us to believe would still have that level of good resource material in the veins left. So we're onto a new, very high-grade ore shoot. We don't know how big it is. We're going to go back there and see that. We've had additional new veins discovered in our drilling. And so we see this building fairly easily into a district-scale resource of economic proportions. We'll get enough drilling done this year to hopefully have a maiden resource on the project, and then off to the races with another developable project if all goes well. And so very good news.
So how much drilling have you actually done in terms of meters or dollars, or however you want to measure it?
And we've spent about we've had two major programs, just under $1 million worth of drilling to date. Obviously, we need to do quite a bit more, but this next program that we have approved is about $500,000 worth of drilling. And it goes quite far, that $500,000 in Mexico compared to other jurisdictions. It's still one of the most, efficient countries to be drilling in to get, the most bang for your buck. And we're drilling at $100 a meter. Many other jurisdictions, it's 2 or 3 times that.
And so, given what you're starting to see, certainly some of the numbers that I've seen in the press releases, in the past couple of months, is it's kind of must be encouraging. Would you contemplate or need to go back to market and say, do you know what? Give us some flow through. We're starting to see something good here. It could be a third, discovery project which we think has got legs, and maybe we could maybe do something with it ourselves, or maybe it might be something which allows you to bring some money in by bringing a partner in to use their balance sheet to work that through, because you've got a big portfolio of assets. It's just a question of where you allocate time, effort, and capital.
Yeah, exactly right. We definitely have the money in hand to go and take it to the next step, and then we can sit back and see what does this resource look like to the point we've taken it, and whether it looks like it's big enough to involve a partner. That's one possibility. certainly there are some major players looking for additional district scale plays in Mexico to develop. The other possibility is just to bring along ourselves. We don't have any further property payments on the claims there. We own them or will own them as soon as the title's transferred. We've made or just have. We will be making the last payment, which wasn't very substantial for this. So we're in a great position to take our time and see where it leads. There's no real impetus for us to do things faster than we can or faster than makes sense given our other resources. So I think we can balance bringing Velardeña on and continuing to advance Yoquivo with the funds in hand and the funds that will become available to us without really looking at a major funding effort for it.
It's interesting, isn't it? You got the production, you got the development and the exploration, blue sky of the exploration there. It's a nice balance to it, but you do have a bunch more assets. Should we skip down to northern Argentina, Sarita, Este? Little initial drill program going on there. What are you starting to see?
Yeah, and that's a really exciting program from my point of view because it's the first drill program in that property ever. We're in elephant country. We're right next to the giant Taka gold copper deposit that First Quantum has. And our initial results are economic grade and width gold in oxide form near surface. So whenever you have that kind of a discovery, and I'll call it a discovery, you don't know how big it is. You know that you've got something that could, if it expands at that same width and grade, you've got something that could easily turn into a major resource that would be potentially developable. And bear in mind, we're only about an hour away from Madero. They're making money at Madero. We're just in a great part of Argentina, and the Salta jurisdiction is the best in Argentina for developing mineral resources. I'm very pleased with that, and we'll be drilling there shortly. So I expect to hear good things on that project as it goes forward.
So here's the big question. How do people value you? Okay. Because Rodeo is throwing enough cash. You're making money, right? So why not? Why not? It's not a lot of money. Short life of mine, as we've said all the way along. Velardeña. So basically, you're making money, but you're then plowing it back into the ground, right? Velardeña is the one which gives you 10-year life of mine, and with decent production, $20 million a year, depending on what the precious metal market is doing at the time. That's okay. That's not bad. And then you're talking about district-wide development of the Yoquivo, right? So you each one kind of steps up. But right now you're $100 million, $110 million company. I'm trying to work out what people are giving you credit and value for. It's not the rest of the portfolio, if anything, because you're not doing anything with it. What is it that they're looking at and saying that's worth $110 million?
No, definitely the value from Velardeña is substantial for the company. Now it's long-term value, long-term project, over 10 years, and expandable from there. We know that's not the limits of the resource. So given that as a steady source of potential cash flow for the company, and then looking at our other assets such as Yoquivo, Sarita, Este, Quevar, there's a pathway forward to become a mid-sized producer from these assets as they continue to come together. So proven that we can be an operator, proven that we have projects that come together well and produce cash. They're profitable. And then continue good results. I think that there's really not much question that these come together and continue to support a long-term growth proposition for the company as a profitable producer. So, the baseline values from Velardeña Rodeo. The forward-looking value comes from Quevar, substantial resource there. Yes, it's under option to Barrick. We'll see what they do, but they either move it forward in a big way or we get it back, and it's a developable silver project. Results from Yoquivo, they continue to look as they have. We will put together a new resource and then be building something in Mexico easy, not too high cost to develop something that we could do ourselves or partner out. So I think that the investment story, the growth picture here is very solid. And with the very good baseline that we have, there's really not much problem putting additional value on some of these exploration assets, even though they're not immediately developable.
Okay, so it's two more questions, right? So one, so I didn't kind of catch what Barrick are doing at Quevar in terms of spend. They're continuing to spend. They haven't kind of handed it back yet. So what's the plan from them?
Yeah, so they met their minimum expenditure requirement, which was fairly low, frankly. And they continue to propose programs. They have proposed to do a drill program this year. It's not a large program. Initially, I think they proposed a 5,000 meter program for that size property. That wasn't large, but they've reduced their expectations somewhat on that. Frankly, I expect to get it back.
Okay.
We'll see what happens.
Fine.
But I love that deposit. The Yachte deposit is a super high grade economic silver project there that we have a PEA level report out on that we can easily move into feasibility.
See, I don't mind that. I don't mind it from CO because the amount of times that people come on here and go, oh, we've got X, Y, Z major doing the bare minimum on our project. It's going to be worth billions. Unbelievable. Just because it's handed back doesn't mean it's not worth anything. It just means it's not worth anything to a major. It doesn't meet their criteria or threshold, lower threshold. That's fine. No problem on that one. Second question is around, so I come back to Velardeña, because you made me think about, obviously with PEA and confidence levels, etc. And you talk about these sort of measured and indicated numbers, but also being able to use the inferred, right? So how does the fact that you're not going to go through the study process or not need to worry as much because the way you're structuring or potentially structuring the finance, how does that affect your drill program and modeling? Because normally you'd have to go through some kind of infill process and bring inferred into measured and indicated, and you're really doing that for the finance guys, not necessarily for yourself. So, how much confidence have you got about your modeling, about what you've got in the ground, given the nature of the ore body? Will you be doing more infill drilling and to prevent things going wrong further down the line, or is it? Well, what are you planning on that front?
Yeah, we'll do some drilling ahead of the development. So, where we've identified the veins and we know them well, there really isn't that much risk in going down a level and extending on strike development along the vein, where we're within say 100 meters of known data points. But we took a very conservative approach in our inferred classification. Previous studies at Velardeña had been much less conservative, shall we say. And so when we took over, we basically said, okay, well, yeah, they can be that optimistic, but we're going to be more conservative in our approach. So our inferred material is very likely to convert, frankly. And there's all sorts of inferred material out there. There's the wildly speculative, and there's the stuff on vein, on structure that that is in all likelihood going to produce a certain percentage of M&I. So we've tailored our resource evaluation along those lines. We will do additional drilling at Velardeña. We have plenty ahead of us to get started. As we start and get these stopes developed and producing, we'll get the drill out in front so we know exactly where we need to be. It's beyond knowing that it's going to be there on structure. You need to know exactly where on structure so you get your development in the right place in an underground scenario. So that's the part that requires a bit of fine tuning, but we definitely have that ability, and we'll be able to get that drill bit information in and process it ahead of spending the higher dollar cost to get the development out to where these vein resources are. So to me, it's not a problem whatsoever. Most narrow vein type deposits work like this. They have to, because you just can't afford to drill them all out ahead of time.
Okay, interesting. The other like I say, it's like my favorite organic jigsaw puzzle, this story. I like the way you kind of piecing it together. I find it fascinating, actually. You've got a couple of appointments to the board as well. What does that tell us?
Well, we brought in a new director, Deborah Friedman. She had been corporate counsel previously with the company, and we welcome her back onto the board of directors. She's a great asset in terms of any potential major business deals, just better governance, shall we say, for the company than we may have had in the past, and it just puts us in a great position for expansion and growth in the manner that we're putting together here for the company. So I think that board appointment is excellent. We have a new CFO coming on. Our CFO for the last since the initial formation of the company basically is retiring. A very normal process. Now it's all very, very organized and gone well. Julie Weidman, the new CFO, is on board and she'll take over as CFO tomorrow. In fact, Bob's last day is on today.
Right.
So no, things are going well. It's just the normal evolution, shall we say, of a company that's going about its trajectory for growth and expansion.
Good man, Warren. Look, appreciate the update. Sounds like things are progressing. I'm particularly pleased about the Autotech testing. Seems on the network seems to be and biooxidation, I should say, is working for you. I look forward to staying in touch, following your story, and seeing how you get on. So hopefully we'll see you soon.
Thank you, Matthew.